rambled on this point, because I've also heard hints of that, and even the slogan itself, if I can be candid to the rest of the team, is, I think, don't do it in isolation. Look at what the guys on the ground, what is it that they're looking for. The challenges, the previous groups, in terms of the cross-border trade, and I think this is really the main theme I've been asked to say a few things around. We have actually seen how much that is of a challenge for the reasons that they've stated. African countries are definitely very protective of the currency. It's typically where the international community, where a lot of the capital for the governments comes from, where assessment of the economy is assessed. So if you look at Zambia did a sovereign bond in 2012. That bond was at a coupon of 5.5%, or a yield of 5.5%. Early this year, January this year, the Zambian sovereign bond, the same bond, was trading at a yield of 15-16%, and purely obviously driven by sentiment, copper prices, where the currency is sitting. Yes, some of the challenges are internal, but Zambia has got no destiny where the copper price is going to sit tomorrow, and the same applies to many other African countries, especially those that rely on a single commodity. And so in part, that's where maybe some of those challenges and that nature being overly protective comes from. And then obviously, as usual, for me, that describes pretty much an imperfect market. So you get the illiquid nature of the markets coming in, which then also brings in the other element, and in part that's some of the hats I wear, the high transaction costs, and those followed through with that as well is the poor infrastructure. So the same sovereign bonds that Zambia raised, we did 3 after the first one in 2012. Zambia had done 3 sovereign bonds by the end of, or by the middle of last year. There isn't a single Zambian pension fund that was allowed, well, not allowed, they were just not considered to participate in that process. And we have always argued, again, part of the issue is it's very easy, and in part the same initial point I raised, to run to Goldman Sachs, to Deutsche Bank, and sort of the other big banks, which I don't necessarily share the same extreme views as I've heard about the banks here. I think there's a balanced view to all of that. But we're very quick to rush those entities. And so, of course, Deutsche Bank, who has got 0 presence in Zambia, pays 0 taxes in Zambia, they're going to go to their buddies and friends in London and in New York and place the Zambian paper with them. They're not going to go to the Zambian State Pension Fund. Yet today, Zambia is sitting on a portfolio of $3 billion of assets that are not being tapped into. On a monthly basis, it's a small economy. We think it could do a lot better, and there's got its own challenges on that side, and I'll touch on those briefly. We collect $35 million net receipts after payments, because median age is 70. They have $35 million net receipts left that they don't know where to invest, and nobody talked to them because the people on the ground were not involved in that process. Deutsche advised the Zambian government in August last year. They placed that paper at 9%. In February this year, they wrote out a paper saying, gee, Zambia is junk, you better get out of it, it's trading at a yield of 16%. You better buy Ghana. Oh, wink, wink, we're advising Ghana, right? And so, unless you involve the local in whatever form, whether it's the lawyers, whether it's the advisory firms and so on. I'm not pitching here for work because it's not government officials, but I think that inclusive element is cardinal. It's very, very important. And addressing that together with the infrastructure side so that we have visibility. The Ministry of Commerce in Zambia does not have visibility to how their sovereign bond is trading. It's a Bloomberg terminal. Right? They don't have visibility to it. So invest in the infrastructure, invest in understanding how the markets work. I was just saying to somebody earlier today, Zambia finally set up a stock exchange in 1993-94. State of the art, meets the G30 requirements, but it hasn't been able to evolve because it was done, and we trade and we have raised money for various businesses in Zambia and done relatively well with it, but it hasn't evolved to today. And I was saying to somebody to the extent that because we haven't been adapted to where the world is today, a Twitter, a Google, a Facebook, they would have been ineligible to list on the Lusaka Stock Exchange to raise capital or to distribute their ownership for a number of reasons that they breached. It's not just one or two. There's a number of conditions that they breached, which ironically, in 1994, 1993, those businesses would not have been eligible to list on the New York Stock Exchange, and that was revised to compete with NASDAQ. So that ability for us on the continent to be fluid and move with the times is very important, because we get to this situation where things are changing so fast that you leapfrog this technology in, and you're literally coming into a market where things are still operating on the basis of the 1970s, 80s, and maybe the 1990s as well. I didn't want to spend too much time. The original presentation, I spent a bit more time on the challenges, but I think they've been exhausted, right? And I left my predecessors. No, it's great. You dealt with all the negativity, so that's all right. But from our perspective, with what I learned yesterday, I think, and obviously just based on our own experience with Pangea, I think the biggest opportunity that STEM presents, which was just briefly touched on, but nobody else has really said much on this, is the ability that it presents for crowdfunding. Because you're quite right that private equity in the manner that it works, and they typically come from London and say it's going to work this way, or even the guys who are doing crowdfunding in the traditional sense, they say it's going to be in this manner. But I think here there's an opportunity where you've got the issuer or the owner of that business saying, I need funding either for my whole business in this format, or I just need value add to take me from this point to this point, and I need this financed. And I will promise I'll pay you back as follows, or this element will actually ultimately be on balance sheet or off balance sheet finance. And I think there's so many creative ways that can be done. And the other thing that is there, the big problem I have with the private equity guys, is they parachute into the continent and they walk around Lusaka and they say, we're looking for the $50 million deal, only 20% equity stake, and I'm running around trying to find a $200 million business in Zambia. You're not going to find it because it's probably owned by a large multinational. But the local guys, what they need is funding that sits between $250,000 to maybe tops 10 million. That is really sort of the sweet range. And this fits into that so wonderfully from so many different perspectives. So this, and I actually said this to some of the team, is really something I'd like to explore further, because already in mind for me, I can see 4 or 5 different opportunities in Zambia where this could fit in. The second aspect is this element of how the end user utilizes this product. To be candid, I'm not entirely convinced. And Ned, I think, touched on something that was very cardinal at the beginning, and that was the whole discussion about the smartphones and access to the internet and making sure that you have power and et cetera, and so on and so forth. And I think that's quite key. And that process, because of costs, and these devices are not typically manufactured locally, although I think the phones coming typically out of China, you can see that process is going to be a lot faster. But until you get to that stage, I think you're going to see, as a general user, you're going to see some challenges. And you see it, if I give Zimbabwe as an example now, today, I've got buddies in Zimbabwe, when they look at their screens, they've got all these commas on all this money they have in their bank account, but you go try and do a withdrawal, and you can't get any cash out.